Hey y'all, Mike back here with another stock analysis. And today we're going to be discussing Peloton, if it's worth the buy and if you should invest your hard-earned money into the stock. Before we begin, I just want to say this is not financial, legal, or tax advice. I am not a financial advisor. Make sure you do your own research before doing any investment. Let me know down in the comments what you think about Peloton as a company. Have you ever even used the Peloton app or the Peloton bike? And what do you think about this whole work from home and work out from home trend that's going on? And with that, let's dive right into Peloton. So today I'll be covering three main things: their product lineup, just an overview, their strategy, and their financials, and ultimately if I recommend that you should buy them or not. So diving into their products, they really only have three product lines, so it's pretty easy to understand. They have bikes. This includes Bike Plus and their regular bike. This costs about $2,000 for the full package deal. On top of that, we have treadmills, which is a whole different category. These cost anywhere from $2,000 upfront to $2,500. Then next, we have the digital subscription. So not only do you need to buy these bikes and these treadmills for $2,000 upfront, you also need a monthly subscription. So these monthly subscriptions cost about $40, and they provide you access to all the classes, both live and recorded, that actually allow you to use the full value of your bike. So I personally have used Peloton bikes, and although I find them very enjoyable, I don't think I would ever spend $2,000 on a bike. And on top of that, I don't think I would spend $40 a month for a monthly subscription just to get the full value out of my bike. But again, great products. So next, let's take a look at their strategy to really understand where they're trying to get to. So first off, they're trying to not only bring a high quality gym experience into your home, but they're also trying to bring high quality motivation. And they even write this in their marketing material on their website. So if you've never taken one of these in-person classes like SoulCycle or CrossFit, you'll actually find that it's very motivating. Being in a class full of people, being with a live instructor, them telling you what to do. It's not only a good workout, but it gives you a sense of community. It gives you a sense of, hey, I'm doing this with other people. It gives you a sense of a motivation to do better, to compete against other people who are sitting right next to you, or maybe even do better than your instructor. And so I really think what they're trying to differentiate on is, number one, they're trying to reduce costs. Right? So if you've never been to one of these classes, it's about $30 to $40 per class, which is insane. I don't know if I would even ever pay that much for a class. But again, with their monthly subscription, it's only about $40 a month. So an insane difference in price. Number two, I think they're trying to go for convenience. Instead of having to drive to a gym, instead of being on a gym schedule where they schedule the classes, it can be about your schedule. It can be about having a bike right at home, being able to sit on it whenever and just start pedaling and start working out, and having an on-demand class, whether it be live or pre-recorded, ready for you to go. And I think convenience is a very important factor that we're seeing in today's market with Amazon Prime, instant video on demand. And I think this is going to be a decent selling point for a lot of customers. And then last but not least, their hardware and their software is easy and seamless. Their hardware works right out of the box. It gets you going onto the cycle. It gets you pretty excited to just go ride. They have basically a built-in tablet into their bike, which is connected to the actual hardware of the bike. So you can easily change dials, you can easily change knobs, and it'll all reflect within the tablet and within the app. It's just easy and seamless, and it works very, very well. So those are their customer differentiators, but I'm curious to actually look at their business differentiation. If we take a look at their business differentiation, we actually find that they have a huge advantage over brick and mortar places like SoulCycle, like Flywheel, like even gyms that we see like Planet Fitness. And the big reason is they don't have to build out physical locations. If you think of SoulCycle, they have to rent out a place, they have to decorate the place, they have to buy physical equipment for all of their customers, they have to get licenses. It's a lot of effort to set up and scale physical locations. What Peloton is really trying to do is they're trying to cut out that. They're trying to bring cycles directly into a customer's home. Their path to scale is just selling more hardware and selling more subscriptions. They don't need to go through the expensive setup process with brand new physical locations. However, the interesting thing about this though, from a business standpoint, is there's really nothing stopping another company from doing the same thing. right? Besides obviously selling hardware, it's pretty easy for another company to offer a digital on-demand workout subscription service that you can view from your phone or from your TV or from a tablet. My biggest worry about this strategy is their hardware, which I did mention is easy and simple, but I really think the price is way too much. It's about $2,000 starting out. And if we really believe that growth, which I'll touch on later in the financial section, is a big part of the Peloton story, then I think this one is going to be really hard to justify because I don't see high growth and high demand across all of America and Europe with just a $2,000 bike. I think that cuts out a lot of middle class folks like me and like others who don't want to justify spending $2,000 up front, which is a lot of money. And so recapping their strategy, I really think you should invest if you believe that home workouts are the future, even post-pandemic. So if you really see workouts staying more in the home, if you see people going to less classes, going to less physical gyms, then this is the stock for you. Number two, if you think that Peloton will release cheaper hardware, because again, $2,000 at the starting point is a lot to justify for most customers. So if you really believe that Peloton will release cheaper hardware and that they can, then I do think the stock is worth a look. And last but not least, if you don't think a competitor will come in and just copy Peloton's model, do it better, do it cheaper, then this is also a good stock because then they have a solid moat. Next, let's take a look at their financials to understand where they're going with their money and if, again, they're worth a buy. First thing I want to point out is they have solid margins with finally a quarter with positive net income, which is huge. In the last quarter, they've seen a gross profit margin of about 47%, which is really, really good. And the other thing to call out here is they had a net income of $89 million as opposed to last quarter, they had a net loss. And so we're really seeing them starting to turn the table. We're really seeing the pandemic start to help them out with both income, people buying more Pelotons, people subscribing more, and lower churn rate. The one thing to call out here is subscriber growth is really important for the continued growth of this company. So the key thing to note here is that number of subscribers is really important for growth for this company. The more subscribers they add, the better margins they will naturally have. It's already a fixed cost to produce one class. You already pay for the instructor, you already pay for the studio, you already pay for the time. The more subscribers you have and the more you can distribute that class to more people, the better your margins are, right? It basically costs $0 to distribute this class to more people. And so the more subscribers they have, the more this margin will increase and the better income that they'll have. The next thing to keep in mind is growth. Growth is a big driver of the stock. In last quarter, it grew about 23%, and they're expected to grow about 20% next quarter. And so if you think that they can really hit these growth rates, especially with the pandemic, and long-term after the pandemic, then I definitely recommend you take a look at the stock. And the last thing to look at here is their guidance. So they're guiding about 3.5 billion to 3.6 billion revenue for all of next year. And the interesting thing is their market cap is around $32 billion. So they have just under a 10x revenue to market cap multiple. And I think this is really important because they're kind of valued like a high growth software company like Google, like Snap, like Shopify, like Square. And if you do think that Peloton is more like a high growth software company, then I do think this is actually a reasonable valuation. So to recap the financials and what I think, I really think you should invest if you believe that Peloton will grow a lot, especially with the pandemic. Again, a lot of this stock and the stock price is calculating in a high growth rate. And the last thing, if you believe that this company should be valued like a software company and a high growth software company, then this is definitely a reasonable valuation and you should definitely take a look at it. So my recommendation here is, in the short term, Peloton might actually make a lot of sense with the pandemic. A lot of people are definitely moving from gyms into their homes and doing a lot of workouts on the Peloton, on a lot of other apps in their home. And in the short term, I definitely believe workouts at home is a big area of growth. However, when we're talking long term, I don't know if Peloton is the best stock. I actually don't quite know if people are going to start migrating back to gyms, if that means people are going to start canceling their Peloton subscriptions. I'm actually not sure. And on top of that, I do think it's pretty easy for a company like SoulCycle or CrossFit to easily live stream their classes and build a Peloton competitor. So I think in the short term, Peloton is actually a pretty good stock with the pandemic, with a lot more people working out from home. I think long term, however, it's a bit of a question mark for me. I'm not exactly sure where the workout industry is going long term, and I don't know if there's going to be other competitors in the space who can basically copy Peloton's model of pre-recording and streaming live classes. So let me know down below in the comments, what do you think about Peloton? Are you going to invest or not invest? And remember, make sure you like and subscribe for all future videos on more stocks, on more product strategy, and more analysis. And with that, make sure you do your homework, make sure you understand a product strategy before you invest in any stock, and make sure you make money. Peace.